All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's go out start with the challenge here, and we have two positions on the board. We have 48 cents for FCX and 1670 for Netflix here. There we go. So it puts the challenge back to about 3,000 here. Nice move on Netflix today. Definitely nice. Not a nice kind move here for FCX and how it's affecting the option there. We saw the close on Friday affect the option, but then 20 cent down here today, is affecting it. That said, position is still intact. We're nowhere. We're not. The stop level 1077? Yeah, 1077. So nothing to adjust or do there. Let's face it, most of the challenge trades so far this challenge have started out the exact same way as FCX, and I think Micron's the only one that hasn't. We will continue to hold that through the process here. Hopefully tomorrow we can get a nice little jump up, at least break today's highs. I'd like to see it break Friday's close. We don't have a lot of volume in FCX today, and it is just kind of trading right around with its sector, but nothing to adjust there. Netflix here today has a little more volume on it. You can see today's volume, and today's a Monday, right? So volumes typically are lighter on Mondays, and you can see the volume is the same volume as it was on Thursday and Friday, and we still have 90 minutes to go. A nice volume day. 311 is where the initial price target here on Netflix comes into play. 311.83. So still have a ways to go to get there. And we'll continue to run with the position here. Now it is a position where we only have one contract, so as it hits that price target, I'll be forced to kind of pull it off and readjust with a different option. But hopefully we get that chance. Tomorrow morning would be nice, right? We can hope, right? But anyway, nice little breakout here on Netflix, and able to take some of that Sock Gen morning sell and reverse that and push on higher here. I did get asked this morning why I would hold the position if an analyst downgraded it. And the reality is that when it comes to the challenge, the analyst upgrades, downgrades, they simply don't matter. I'll share them, to impart some understanding on what's going on. But, when it comes to analyst upgrades and downgrades, if you go track them over time, they don't have a lot of bearing on things, except for on the short term of the stock. And, a lot of times, what do I know? How do I kind of react with it? Well, if I'm in a stock and I'm playing the upside and I wake up and that stock gets downgraded, I know that day I probably can't expect a whole lot of gains. I'm just looking for it to survive that day, right? And occasionally we do get a Netflix situation, though it wasn't a pure downgrade. But oftentimes after that first day, the upgrade downgrade's gone. That effect is gone, and nothing. The stock gets back to doing what it was doing. But anyway, that's Netflix, that's FCX here, and we'll hold both of these into the close. Now, there are no new signals on the board right now. We have some downside crossovers in the energy space. Valero, for instance, but very high consolidation risk here. We have Chevron, for instance, but also high consolidation risk. And then EOG, which I thought could trigger today, but it's not triggering. Low volume on it today. Now that doesn't have anything to do with the trigger, but we are seeing some pretty light volume on it. I'd be interested to see what happens if we get an upside crossover with EOG. We have a lot of things like American Airlines, that have had some decent pullbacks. And, all right, are they going to get a nice little upside crossover here? We'll see. But we do have a market that, is sitting up near highs where we're not talking about the market having a tremendous amount of new highs versus new lows, right? We're not even to where we were at the beginning of November. when the market was lower than where it is now. There's just not as much participation happening, and we talked about this last week. It's a warning sign, right? It's that warning sign. It's that sign when you're going down a back road, long country road that's 65 miles an hour, and you're just buzzing down the road, and you see a deer crossing sign, right? It's a warning sign, but you're not exactly slowing down to 20 miles an hour looking out for a deer, right? And that's what that's what we continue to see in some of the metrics in terms of some of the shorter term stuff that would kind of give us a better look at, hey, you know what, the market's ready to break down. Well, there's no sign. Number of stocks above the 7-day moving average, 329. That's 65%, trading above the 7. That's a very bullish number. We're about 70% above the 20-day moving average. That's a very bullish number. And not only bullish in the raw number, but bullish in terms of the way that it's gotten there. If we go and look at something like the bullish percent index, we see the same thing, right? I mean, it's just continues to climb just a little bit. So no real confirmation for the bears on any kind of warnings or anything like that. And again, something could change, right? Something could always change, but as it sits right now, nothing is really changing there. Now, let's go take a look at the performance metrics here of some of the major sectors, because I think there's an interesting clue to things here in them. Let's come in here, go to performance, and let's come in and we'll compare the S&P to a few things, right? Let's compare it to small caps, the IWM. And we'll notice that the S&P over the last 30 days is outperforming small caps by about 0.8%. For this to be significant, the performance of the S&P versus small caps to be significant, there needs to be a 2% differential. So it's not incredibly bullish. It's not incredibly bearish. It's very neutral in how it in how it sits, and we see that throughout a lot of things, right? One exception is the EEM. This is the emerging market ETF. Over the last 30 days, the emerging market ETF is 2% below the S&P. Okay. All right. We saw it in November really outperform the S&P, the beginning of November, and then since the news last week, it has lagged, but a little bit of warning there, right? A little bit of warning there. What about transports, right? The IYT. Well, S&P is outperforming transports by 0.5, 0.6%. No real significant difference there, right? Not something that you look at and you go, well, that's bearish or that's bullish or anything like that. Here's the XLF financials. Financials are still outperforming the S&P by over 2% in the last month. That's a very bullish number, and one that you kind of look and you go, okay, offsets the EEM a little bit, in terms of the metric performances. And so, when we break it down by sectors, we break it down by caps, we break it down by, by global markets, we get the same thing. We see a few warning signs, but the majority of indicators remain bullish, and nothing has nothing on that has changed here today, and it's probably going to take some substantial news for that to change. I know a lot of traders that are always looking at what's changing. Well, the reality is nothing's changing right now, and we do go through periods of the market where there is very little change in the metrics, and today is just one of those where what has been is continuing, and no signs of reversal here just yet. If you're bearish, what are you looking for? Well, you're looking for a catalyst, number one, right? You want to see a catalyst. But number two, you're looking for a breakdown, or at least something where the market starts to break down below the 7-day moving average, right? Since right here, the beginning of October, the market has not had a single day where it is closed below the 7-day moving average. Right? And yes, the 7-day moving average is a simple metric, and if it breaks down below the 7, that's not necessarily, hey, bears are in charge. but they need that at least, right? You can't have a bearish sell-off unless you at least break that 7-day moving average. So that's a really nice kind of initial point to look at and to say, okay, you know what? That's where I got to pay attention and say, you know what? The bears might be gaining some control. But right now, it's still not there. Still nothing for the bears to really sink their teeth into as the market continues to climb to new highs, which are justified based on the earnings, right? They're absolutely justified based on the earnings. We looked at that over the last earnings season, and we could argue for a market significantly higher based off of last earnings season. Okay. All right, so holding Netflix, holding FCX here into the close, and we'll run with these here into tomorrow. See what they give us, and go from there. Have yourselves a great day, and we'll talk to you later. Take care.